Good day everyone. Today I'm going to discuss about the accounting cycle. So, the learning objectives of the accounting cycle. Familiarize oneself with the accounting cycle. State, apply the rules of debit and credits. Analyze transactions with the use of the debit and credit T accounts. Journalize transactions in the general journal. Post the journal entries and the general ledger. Prepare the trial balance and appreciate its use. So, the double entry system of record actions, it is a record transactions in accounting based on a double entry system. For every debit, there is a corresponding credit, so total amounts of the account debited must equal to the total amount of the accounts created. So these are the accounting cycle. These are the 10 accounting cycle. So first is identifying and analyzing the events recorded. Record 2. Recording transactions in the journal. 3. Posting journal entries to the ledger. 4. Preparing the trial balance. 5. Preparing the worksheet and adjusting entries. 6. Preparing the financial statement. 7. Journalizing and posting of the adjusting entries. 8. Journalizing and posting of closing journal entries. 9. Preparing the posting closing trial balance. 10. Journalizing and posting revising journal entries. So, these 10 accounting cycle are very important in industry of accounting because we use this when we are work in a and when we work soon, we need to be learn this kind of accounting cycle that is very needed when we have a work. So so each of the accounting cycle, they have a different explanation. So first is I am going to explain about the identifying, analyzing the event recorded. So identifying, analyzing the events recorded. So and the accounting cycle, it is a collective process of identifying, analyzing, and recording the accounting events of the company. So first is the identifying, analyzing the events recorded. Kining identifying, analyzing event recorded mo ni siya ang mag-analyze sa mga source documents from the gina-record niya diriya ang mga transactions sa mga events sa mga journal, different events of journal. Tapos ginabut after sa pag-transaction sa event journal, ginabutang po dahil siya sa post journal information to ledger accounts. Then after that, gina-prepare din siya to analyze and to trial balance. So second, recording transaction in the journal. So recording transaction in the journal, also known as journalizing, this is a process of recording the transactions in the first book of accounts known as the journal. So as we can see here in a example, this is the examples of the recording transactions in the journal. We have here the morning account receivable, inventory, account payable, insurance payable, notes payable, capital stock, retained earnings, sales of merchandise, cost of goods sold, spending salary expenses, salary expense, insurance expense. Tapos, debit credit, cash is 2,000, 20,000. Accounts receivable is 50,000. Inventory is 65,000. Accounts payable is 18,000. Insurance payable is 70,000. Notes payable on term is 40,000, which is belongs to sa credit. Credit siya kay ano man siya. capital stock to di lang siya butang sa credit. Next is retained labas in 32,000 credit credit yapon siya. Sales of merchandise still credit yapon siya, which is the 250,000. And cost of goods sold 150,000 debit siya kay, you know, rent expense 12,000 debit chapon siya, salary expense 60,000 debit chapon, utility expense 10,000 debit, still debit, insurance expense 3,700 still debit, total debit dapat si total din siya tanan and the total of the debit is 3,700 370,700. Ang credit is still the same kay kung ano man, dapat balancing man siya, dapat still the same. So next, posting journal entries to the ledger. Posting journal to the ledger, so also known as posting. It is the process of transferring the information found in a journal in the book and financial known as a ledger. So this is more importante po siya sa ato ang kan kay diri gina-record ato ang mga information found nga to information found into the journal, the book of the final entry known as a ledger. So makita to diri sa example. Next is preparing the trial balance. The trial balance is a list of accounts found in the ledger together with accounts balance or total. This is a proof that for every debit there is a corresponding credit. It also proves that the ledger is in balance. Yeah. Here dapat balancing siya. Like, mo ni mga accounts title, cash, accounts receivable, art supplies, prepare rent, prepaid insurance, transportation equipment, office equipment, account payable, notes payable, utilities payable, independent revenue, on capital, on drawing, pending revenue, salaries expense, utilities expense. So, money ang niko ang are money the title of the trial balance. Title of the company is Nico Ong Art Gallery, tapos trial balance. Don't forget to write the title, trial balance on September 30, 2014. Cash is 340 and 500 pesos. Accounts receivable 50,000, art supplies 12,000, prepaid rent 30,000, prepaid insurance 18,000, 300,000, office equipment 50,000, accounts payable 37,000, which is na belong siya na credit siya kay Byron man siya, accounts payable. So notes payable is 200,000, utilities payable 900, unearned pending revenue 250,000, on capital 500,000, on during 30,000, which is debit siya. And a total of 1,337 and 900 pesos. So as we can see here, the money siya ang examples of the trial balance. Next is the preparing the worksheet and adjusting entries. Worksheet is a common tool used by accountants to accessible na sheet to prepare paper of all information needed to prepare the financial statement, adjusting entries, closing entries, and post-closing trial balance. So, preparing the worksheets and adjusting entries. So, worksheet is an e- it the worksheet is an important tool used in accounting to prepare the financial statement and analyze the accounting cycle. The account cycle is also known as the accounting cycle, refers to the sequence of steps followed in recording, summarizing, and reporting financial transactions of a business. The worksheet helps accountants organize and summarize the data before finalizing the financial statement. As we can see here, the examples of the worksheet we are here. Nadri ang prepare trial balance, enter adjusting entries, extend adjusted trial balance, prepare income statement, pre- prepare balance sheet, analyze the worksheet, prepare closing entries, and lastly is prepare post closing trial balance. So a worksheet is a common tool used by accountants to assess accessible on the sheets of paper all of the information needed to prepare the financial statement, adjusting entries, closing entries, and the post-closing trial balance, and many more. So next is the preparing the financial statement. So the preparing the financial statement for we have the four financial statements should be prepared to provide useful information to parties interested in the financial information of the business. Financial statement, statement of financial position, financial income statement, statement of change in owner's equity, and statement of cash flows. So we have here the provided examples. As you can see, the muna siya ang examples sa to ang preparing the financial statement. Next is the journalizing and posting of adjusting journal entries. So we have here the provided examples of the adjusted trial balance. So what is journalizing and posting of adjusting journal entries? Adjusting entries are prepared at the end of the accounting period to update the accounts of the internal transactions because they affect more than accounting period. So, journalizing and posting adjusting journal entries are essential steps in the accounting cycle that helps ensure the accuracy of financial statements. These entries are made at the end of the accounting period to recognize revenues expenses that have been earned or incurred but have not yet been recorded. So, here's an explanation of the process of journalizing and posting adjusting journal entries. So, for number one is identify the needs of adjusting entries before journalizing and posting adjusting entries. Accountants analyze the financial transactions in accounts balance to identify any adjustment required. Common types of adjusting entries or includes accruals, deferrals, estimates, and corrections. Second is generalizing adjusting entries. Once the adjustments are identified, the next step is to record them in the general journal. General journal. Each adjusting entry consists of the debit and a credit to appropriate accounts. The debit and credit account amounts are determined based on the nature of the adjustment and the affected accounts. For example, if there is a accrual $1,000 for unpaid salaries at the end of the periods, the journal entry might be the debit is the salary expense is 1,000 pesos. Ang credit is accrued salaries payable 1,000 pesos. The posting adjusting entries after the adjusting entries are recorded in the general journal. They need to be posted to the respective accounts in the general ledger. To do this, locate the accounts affected by adjusting entry in the general ledger and either the debit or credit amounts accordingly. Using the previous examples, the debit of 1,000 to salary expense would be posted to the salary expense account in the general ledger, while the credit of the $1,000 to accrued salaries payable would be posted to the account salaries payable accounts. Adjusted trial balance. Once all adjusting journal entries have been posted, an adjusted trial balance is prepared. The adjusted trial balance lists all accounts that their updated balance after incorporating the effect of and adjusting entries. It serves as basis for preparing the financial statement. And also, it is important to note that adjusting journal entries are typically recorded at the end of the accounting period and before the financial statement or period. They are necessary to ensure that the revenues and expenses are recognized in the appropriate period and that the financial statement accurately reflect the financial positions and performance of the business. By the following process of the journal and posting adjusting journal entries, accountants can make necessary adjustment to the accounts and provide more accurate representations of the company financials. So next is the journalizing and posting of closing trial balance. So what is closing? What is journalizing and posting of closing trial balance? So closing entries are prepared at the ends of the accounting period to update the owner capital accountant. We can see here the examples of the closing entries. Don't forget to put the date, accounts, post reference, the debit or credit, which is the cash, accounts payable, supplies, office equipment, building, accounts payable, and many more. So next is preparing the post-closing trial balance. After the closing entries have been posted, the post-closing trial balance is prepared from the general ledger account. So we have here the provided examples of preparing the post-closing trial balance. These are the accounts, cash, accounts receivable, interest. We put also here the debit and credit. That don't forget to put the title of the title of the trial balance, which is the printing plus post closing trial balance for the month ended January 31, 2019. So next is the journalizing and posting of reversing journal entries. So reversing entries are prepared to simplify the accounting process. So we have here the provided examples of journalizing and posting of reversing journal entries. So reversing journal entries, so we have here the rent expense, stress payable, and many more. So, generalizing and posting reversing journal entries is a technique used in accounting to simplify the recording and tracking of a certain transactions that occur regularly. Reversing entries are typically made at the beginning of an accounting period to nullify the effect of specific adjusting entries made in the previous period. The purpose of revising entries is to facilitate facilitate easier and more accurate recording of subsequent subsequent transactions. So here's an explanations of the process of journalizing and posting and reversing journal entries. So first is identify the need for reversing entries. Second is journalizing revising entries. So first is identify the need of reversing entries. Before journalizing and posting reversing entries, accountants review the adjusting entries made in the previous period and determine if any of them should be reversed. Reversing entries are typically used for accruals and deferrals to simplify the subsequent periods recording process. Second is generalizing reversing entries. Once the need of reversing entries is identified, accountants records them in the general journal. Reversing entries are the exact opposites of the adjusting entries made in the previous period. That means if an adjusting entry was recorded with the debit, the reversing entry will be recorded with a credit and vice versa. For example, if an adjusting entry was made to debit rate expense expense and credit accurate rent payable and revising entry should be. The credit is the rent expense, the debit is accrued rent payable. So posting reversing entries after the reversing entries are recorded in a general journal, they need to be posted to their respective accounts in the general ledger. Locate the accounts affected the reversing entries in the general ledger and enter the credit or debit amounts accordingly. So using the previous example, the credit to rent expense would be posted to the rent expenses account, and the debit or to accrued rent payable would be posted to the accounts rent payable accounts. Subsequent transactions revising and to simplify the recording to the subsequent transactions related to the adjusting entries. For example, if the adjusting entry for accurate rent was reversed, the subsequent payment can be recorded directly as a debit or to rent expense and credit to cash without the need to additional account entries. So it is important to note that reversing entries are optional and not necessary for every adjusting entry. They are typically used to entries that involve accruals or deferrals where it more practical to amplify the subsequent periods recording process. By the following the process of journal and posting reversing journal entries, accountants can streamline and recording of subsequent transactions and avoid potential errors or omissions. Revising and thus help ensure that the financial statement accurately reflect the financial positions and performance. And that would be all. Thank you. And my name is Antonio Bigisihan. I am the one I your reporter for today's video. Thank you.